Hey, what's going on, family? So we want to start a little bit early today because, as you can see, we have quite a few in plays. Some of these have been added, so I wanted to kind of give you guys a lot more value for your time, especially spent with me. In part because there's a lot of stuff that I look at that you guys don't necessarily look at. So I want to kind of cater to some of your needs from some of the guys I've been talking to and what they're looking for. So without further ado, let's dive right into the market. Today is Tuesday, so shout out to Tuesday. If you guys have watched my Sunday video, you know that the Fed rate cuts are highly anticipated for tomorrow. So keep that in mind if you're looking at any kind of volatility plays or any shocks to the market. Typically, those are rug pulls or volatility crushes. Post those kind of announcements, so you kind of got to track. In other words, just watch. Not necessarily don't worry about your account, but worry about more as a regards to the plays that you're in, and is there a change in the option chain if you're running options specifically, right? There will be some fluctuation, so just keep that in mind. We don't know how the market's going to take that cut. It could be already priced in, or that could be a sign of danger. But without further ado, let's kind of dive right in. Right here on the chart, we have good old-fashioned Palantir, right? So we're still in Palantir. We actually took some profits on the way up. We're kind of hoping a little bit for a little bit of a pullback, honestly. Palantir's evaluation being added to the NASDAQ is good. It was added amongst other things. So the outlook for Palantir being I would definitely grow your outlook for Palantir into the 100s and the 140s. But ideally, we'd like it to come down and come pick us up if we're going to average in or buy some more, right? Typically, we like to be a buyer at or close to the moving averages. What goes up typically does at least pull back and come down at some point. So even the most parabolic moves, there are opportunities for it to come down and pick you up. I mean, even when you look at stuff like Bitcoin, we're going to go look at the ETF for that. On this monster rally, there was pullbacks. There was indications for you to get into even this ETF, even if you had a buy bias. Like when I was looking back here with a buy bias, here's a setup. Here's a setup right there. Very, very clear, very defined. Also, setup right here. This is before we actually developed our system and an easy way to look at it, right? So setup right here, we were taking buys up here. We just had a buy bias at that point. But a little late. With stuff like this, we won't be as late. You could take every cross above our set of candles. So something to watch there. If you have buy bias, actually makes your job extremely easy. But right now, in the stratosphere, Bitcoin, like value wise, I think hit 100,000 per coin here recently. So shout out to us. We still have some in the ETF. Did take some off the table at relative at kind of this valuation here on the ETF, but essentially that's stuff to watch, right? We're going to go take a look at the SPY and the Qs. So not really much going on other than you guys don't already know. This SPY has already pushed considerably. Each one of these setups triggered. Each one of these setups triggered, fired, kept moving, triggered, fired, kept moving. So that's kind of what you want to see. We want to jump immediately into profit and have a nice risk profile that gives us a good risk to reward after confirmation, right? We don't have to always catch the absolute bottoms or the absolute tops of things, but you do want to have a good plan that has a high chance of reward and a very low chance of risk. That's kind of what we are looking for. So look for the SPY to kind of enter a rotational period. Remember, this thing has been running a marathon essentially for the last 3 weeks. Absolute mind-numbing, crushing returns for the SPY and mind-numbing, crushing returns for the Qs. A lot of euphoria out in the market. The Qs kind of the same story, outperforming relatively the SPY, outperforming relatively the Russell as well. If you take a look at that, and the Dow. The Dow's actually been struggling, but the Qs is kind of where we've kind of hitched our horse. We recently took a position here on the Qs and have since rolled it 1, 2, 3, 4, and now 5 times relative to the highs. So we have to move our all-time high pusher up. That is good news for us, but you could see some potential cooling off of that. 3-4 weeks, literally 5 weeks, excuse me, of a rally. A 5-week rally is a lot. So cooling off or even some trending sideways to give the market is to be expected. Again, I want to emphasize this, even though there's a rate cut, it might be already priced in with this 5-week move. So yes, it's parabolic. Yes, it could continue, but we're at 3 ATR on the weekly. We're at new all-time highs relative to the entire market, and the rally has been going for 5 weeks. On average, we like to set our plays up for about 3 weeks. This thing has been running for 5. So just keep that in mind. If you look historically, right, like back here, 1, 2, 3, 4, 5. This is about a 5-week run before you see some cooling off. 1, 2, 3, 4, 5. A 5-week run before you start seeing a little sideways choppy action, and what have you. So expect, even in these giant runs, they go to about 5 weeks, 3 to 5 weeks, and then they start to cool off. That doesn't mean the market's going to implode. It just means that, hey, it's almost like a marathon runner. Once I run a sprint, a track runner. Once I run a sprint, I'm not going to just go right into the next event and again sprint. You need to take a break. You need to catch your breath, rest, evaluate, look at your numbers, and then move forward. So we're going to go through these in plays and see what we can find out here. We are doing this a little bit early. So Adobe in the downtrend already made the play. The setup was there, but the only way you would have caught this is if you caught it during before or after hours, not during regular hours of trading. But the setup was pretty current, right? Yet you're in a negative territory, and there's the rip right there, and then there's your trigger. So even if you caught this trigger for a nice pull on the day, you would have caught, like, this is actually, it works really good, but you're just taking what the market gives you, and then not really impressing your biases on the market. There's a nice rip here in negative territory. You see your trigger set up, cross below the low, boom, there it is. Would you be okay with shorting at 520 and maybe covering at the end of the blowout at 498? I think you'd be okay with that. So that's kind of my point here. Same thing here for Adobe. If you had the opportunity at 541 and potentially to cover at 471, would you be okay with that? I think most people would agree that it's okay. We got a brand new setup here, uptrend, with a nice juicy setup candle right here after slight pullback, about 3 weeks of pullback there. This is kind of what we want to see for Adobe, or ADP. So we'll go ahead and mark that here. So we kind of go into an if then setup here. If we can cross above that 298 level, 298.61, we'll take a position to the upside, kind of targeting relative pivot highs or relative highs from there. As you can see, it's kind of rotational here. So I'm going to mark the rotation as it stands, how I see it. There you go. There's your high. And then here is the level right here. And it's tested several times on the daily. Right? Typically, we like to mark weekly levels, but it is in line with the weekly level. So you can kind of pull that back over there and see, yeah, this is the weekly pivot there. We'll mark up another weekly pivot just for the sake of continuity sake on the chart. But boom, there's your levels, right? We'll go ahead and throw one more for continuity sake on the charts. There's another pivot right there. Sweet. So as you can see right here, it's coming down, testing that level. If we get confirmation above there, cool. And then we will respect all of our buyers. So stop out. If it ends up going, stop out at the low there of this pivot, of this level. You might, if you are a little hesitant to stop out immediately at the low, the lowest I would say the stop out would be is below 294, right? Respecting the rotational strength. Some people, they're really hard into their levels and respecting what the levels mean. Me, I want to know what the data is telling me. So it's most of the time it's to stop out here. There has been some times when I have used that level though. So bend, but don't really break your rules. If it breaks that level, or if it breaks this level, definitely set your risk. You owe it to yourself to protect your downside risk, right? It's your hard-earned money. AVGO, not really much to say here. Massive blowout candle. Not looking for too much here. on AVGO as regards to continuing to the upside. I'm actually probably looking for it to cool off a little bit, which is what it's doing. I mean, we've rolled this thing considerable amount of times, and when you look at how many times we've rolled it, 1, 2, 3, 4, 5, that's 5 times we've taken profits off the table. So essentially a stop out for us would look like crossing below that blowout candle there. It's a lot. We've taken a considerable amount off the table for AVGO, as has been others. It's been a great stock for the communities, especially for the trading community. Seeing Broadcom absolutely take off is good. When you look at the weeks, it's been 1, 2, 3, 4 weeks of just insane rallying post earnings play, but our indication to track it was pre-earnings. So just keep that in mind. Again, but the system, it's really I can't take credit for, Broadcom's move or the shout out in the learning, because the system is a system, right? You've been in a defined uptrend since 11/21, so this has been on your radar since then. Buy bias triggers all the way, or actually not buy bias, buy setup triggers all the way up. Meaning I'm looking for positions all the way back here to take buys on the stock here, right, with a stop out. You could be a 2-bar professional. That's about as far low as it goes, and you run it there. Boom. Another play right here, it does get stopped out, but this one right here doesn't get stopped out. Absolute massive push. Same thing. You look at position to add here if you're in the rally, looking to be a little bit more aggressive. Absolutely takes off. So setup definitely works all the way through there on Broadcom. We have BKNG, and it's in an uptrend well outside 3/8 AR. It does have a setup though, so with the way the market is looking in all these rallies, I do mark it, not necessarily something that I want to pull a trigger on. I consider that chasing a little bit. I kind of like to be a little bit tighter. If we go back here, I like to be first in the trend, and then right here as it squeezes through with momentum, and then momentum picks up, you can add here. So you buy here, add here, roll as it pushes away, on these blowout candles, take your profits, really almost eliminate your risk down to zero. Everything is profit. Why is that so important to go ahead and roll or take some profits off the table? Because it takes the mental edge. In this game, a lot of the defeats will a lot of times come from you and your mismanagement of the position. So if you can take off the edge and you say, okay, let's say I put $400 into this play, or $4 into an options play, right? If I have recouped my initial investment, everything else after that is profit. No matter if it goes up, no matter if it goes down, absolutely to zero. The money I put out there, my hard-earned sweat equity, is now off of the table. I now am in this position for absolutely free. I cannot stress to you enough that it's not emphasizing the market. People will like to hold for these massive, like, billboard, returns, and say, I crushed it, diamond hands. I held everything all the way through. Trading isn't necessarily a game that you get any extra points for. I told you so's. Okay, the I told you so's is seeing that money hit you guys' account, seeing that money change your lifestyle. The I told you so's is you guys taking that trip or paying off debts. That's the I told you so's. So the I told you so's isn't necessarily being able to be Instagram flashy. The I told you so's for us is being able to create wealth and catch volatile moves that accelerate that. We have CB. CB, kind of a newer it's that downtrend on the weekly, so kind of watch that. Identify by y'all on our weekly chart here. The 21 period moving average has started to go neutral. The 8 period moving average is crossed below that, so we'll be looking to short the rip on CB. It is kind of down here in its rotational level. Gonna mark that out here. So this rotation identified by pivot highs and pivot lows from previous weeks. So boom, it's at that level. If it can recover, awesome. Probably could recover back up to the 8 period or the 21 period moving average. When it does that, look for a setup candle, look for a short. we'll keep you posted if that comes to fruition. You got CL as well, kind of in the same downtrend territory. You even get an indication that selling pressure is increasing, but we kind of like to catch our setup specifically. So not looking to take the setup unless it gives us the exact swing that we want. We don't have to be in every play. As you can see, there's opportunities galore. We just kind of wait for our pitch. You got CSCO. CSCO currently in an uptrend. Not looking too bad, man. This thing, since the wedge, has just been absolutely game busters for CSCO. Plenty of opportunities to buy it on the way up, but if you didn't catch it on the way up, no sweat. We'll be tracking it from now on for you guys. You know, it's in the ETF watch list, so check that out. But essentially, close to three ATR, massive 1-2. I would say it's kind of a stair step run. It hasn't really been super hyper aggressive like this, but it's been pretty decent, right? I would say it's definitely opportunities to get into this even a little late on the push. Well, as it stands right now, strong uptrend. So looking for a pullback on CSCO. Not to be confused with CSCO. CSCO also throwing a setup here at relative highs, well outside of 3 ATR. So something to watch though. But in this market, you could expect to see a little bit more of increased volatility. This setup right here, let's say you took this play. This is around here. It did continue. So the setup's still active even at 3 ATR. Remember, 3 ATR is a suggestion, not a rule. We kind of statistically things pull back at 3 times its average true range, but it doesn't necessarily have to, as you can see with the Qs or with Palantir or Broadcom or Tesla, right? It's a suggestion. It doesn't necessarily have to respect your invisible line in space. Okay, so in a normal market, that's good, but are we in normal times? That's the question you have to ask, right? So you got CSCO here with a setup potentially to the upside. I wouldn't look for too much. Actually, this is a prime candidate for a butterfly. So you could say, okay, I'll take the butterfly. It's fire and forget. If it gets up to 60, that's kind of where we want to take it with our butterfly. Center strike on the butterfly would be 60. You might take something a little bit below that, something a little bit above, but essentially you're targeting 60. If it crosses above that level, that would be the trigger for the butterfly. DHI, very, very clean, very nice setup. I think we even actually tried to pull the trigger on this one, never got filled on this. This is actually a very clean blowout candle. So the setup was there. We actually executed, didn't get filled. It is what it is. Not chasing that too much, but essentially this is kind of what we'd be looking to see, right? This is our home run, at least base hit setup, right? You see a downtrend. It rips into that 8 period, 21 period moving average. There's the cross, stop out at the high, and it falls almost 2, maybe even 3 to 1 risk to reward ratio. So shout out to us there on DHI. DHR, not to be confused. Not to be confused with that. Kind of we see similar setup as it rips, and there's some follow through, but not too the rips are very, very shallow. So what I'm going to start prioritizing is very deep rips like DHI as opposed to very shallow ones. So kind of keep that in mind. On the short side, you want to have a very nice juicy rip to short into. Duke Energy. Duke Energy has been popping up here a lot lately. It is on the downside. XLE is struggling, so this is one of the laggards inside the SPY as XLE. It's but maybe there's some potential to buy. So like if you can see here, what's low can go lower, but the reality is I'm not necessarily looking to buy something like Duke until a trend changes. Till we can get if it keeps dropping and we get a trend change, then it might be something that we can scoop Duke up on, maybe on a pullback, something like that. So not really looking for, we're looking for our specific setups in these environments. This is a target rich environment. You can just wait for your setup. EA, prime example, uptrend. It has very sharp and defined pullbacks. And so what we want to do is we're going to walk this setup candle down. We've been watching EA, as you can see, a lot of selling pressure here. going into EA. So if we could start seeing a bounce at around this 153, that's ideally what you want to see. If we could see a bounce, maybe across above 158.17, stop out at the low, or at minimum, you could bend your rules down to it has to break at that level. If it does, there you go. Okay, so there's a setup right here in EA, but we're only looking to take that if it crosses above 158.17. ED, we've been in ED. We're still in ED. What most people don't really realize is that there's been super positive sentiment on the market. I want to make something very clear. I actually might even pull up a heat map to this effect. So the market overall in the Qs, the SPY, and I think Russell. Why am I drawing a blank on the Russell? Drawing a whole blank on the Russell, guys. Bear with me. Okay, we'll come back to it. But essentially, the SPY, the Qs, and the RYG. Yeah, whatever. I don't look at the Russell too much, but the SPY, the Qs, and the Russell essentially have been most of the stocks have been actually taking a hit, believe it or not. It's just the few stocks that are in the AI sector and in the Qs that are pulling up the market. The Teslas, the Palantirs, well, not even the Palantirs, the Teslas, the Broadcoms, the Nvidias. They've been kind of pushing the market up a lot, right? And so it's been kind of holding up the market, so to speak, or what I would say concentration in equities. So there's a lot of other plays. I don't want you guys to get so buy bias asphyxiated. There is a lot of setups potentially to the downside. ED has been one of those looks to the downside. You have a very nice juicy downside setup, and we weren't afraid to take that, and it's still continuing to the downside. So very nice rip off the trend change there. Rip into it, into the 21 period moving average. It respects it off the sell. That's one confluence, two confluence when you count the downtrend. Then you have your setup candle breaking off the trigger. Boom, we take the play. Boom, roll one. Boom, roll two. Right. So profit taking twice on that play. And we're still in. So runners in effect. ELV kind of downtrend, very similar story right here. You've got this, but you end up getting stopped out on a sneakaboo, and then just a gap and go. What you could do here is again, this is a bend not break kind of rule set. You know, if you take this, you might say it'd be a 2-bar professional there. That's the maximum I could go for my stop loss, and then you don't get stopped down on the pullback, and you actually catch that windfall. So I like to do the 2-bar professional when the stop is going to be a little too tight for it to run out. So but no more than 2 bars, right? If I'm wrong, I want to be wrong quick. I want to be wrong small, and I want to be wrong often, so that we can get those losses out of the way. If you're looking at statistical wins to loss ratios, you're going to be wrong 3 out of, if you're the best of the best traders, you're going to be wrong 3 out of 10 times. So go ahead and kind of rack those losses in, give it enough wiggle room. But once you're wrong, take your loss, because if you get 3, maybe even 6 of those losses out of the way, you're kind of due for a win streak as long as you have edge. GSI, in a downtrend, we're looking for a little bit more of a rip, maybe with a setup candle to the sell. It does have earnings coming up, so watch out for that. But unbalanced volume being negative in a downtrend is a godsend. I can't stress that enough, right? Unbalanced volume with negative unbalanced volume, I should say, in a downtrend with a rip and a setup candle, you get follow through like that. That's what we want to kind of see for GSI. We want to see that rip happen with unbalanced volume that's negative and a setup to the downside to really pull the trigger. That's a home run hit. Google, a little bit of the same. So if you have a buy bias, which you should on stuff like Google, Meta, Tesla, give it a little bit more the benefit of the doubt on stuff like this. Massive selling pressure here in open water. So like no earnings or anything like that. They might have an announcement or whatever, but once it crosses above here and certainly crosses above this rotational level, taking that buy wouldn't even fault you just because it has like a 4 day, 3 day, doesn't cross and trigger above the 3 day. If you have a buy bias there, it's looking good. Even with a negative bias, even if you're in, negative territory with a buy bias, taking this would have been actually acceptable with a cross above. Right? If you're a long-term buyer in Google and you don't want to just buy average in at the relative highs, but you really want a position where you can justify buying, right here is a justifiable location. If it falls down some more, buying some more is a justifiable location, right? Not just buying just because I get a paycheck, buying because the market is telling me, hey, somebody's got caught so I can see some follow through. It's just a smarter way to buy. That's all I'm really trying to say. So you've got HON. Shout out to that. We did we take a position on HON? I don't think we did. If we did, I don't remember it at all. Essentially, because we take quite a few positions. But this is kind of what you want to see. If you're in a new uptrend, you want to buy the dip, right? So even in a brand new uptrend, right? Negative pressure, with a trigger buy, boom, slight follow through for a double, sells off there, and then you get a nice buy trigger for a very nice ripple, all-time highs. So the setup is in full effect there. LIN, the process is kind of the same, right? You're in negative territory, it kind of rips into the wave and sells off. So not really any indication for us in the setup. This is more of a blowout candle, meaning if you were in this, if you were, well, actually there is, I didn't even see you. I'm so sorry. I'm so sorry. So 1, 2, 3, 4, 5, but there's no trigger for us, even though it's in a downtrend there, because it didn't happen within, 4 to 5 on the candle. We kind of want it to be almost a shock to whoever's getting in at this level for them to go ahead and say, I'm wrong on one of their positions, and not to be a laggard. But here it actually worked out good. You get blowout candle number 1, probably for a take profit level. Blowout number 2, definitely for the runners, or make a decision point, whatever you guys plan to do. But yeah, it was there. Very clean, pulled up into the 21 period moving average, break of the low of a setup candle, and then massive follow through. LYV, Live Nation, right? This is one that we've been tracking that kind of has defied, not getting a lot of looks on the broader web, but it's really getting a lot of looks as it regards to market love, going on its rally from like a 95 to all-time highs of 141. There was a clear pivot level for you to get it. This is, a massive hit right here. If you catch this off the trend change there he is, trend change there, and then there's a dip. I think most people would be okay at getting in at the 95 level, 95.2, and then getting multiple opportunities for rolls, blowouts, all that good stuff. So Live Nation, shout out to it. Your first blowouts are like right here, blowout, roll, right? You can even get a ad an ad above, right, post earning play. Not for me, not recommended at the extended levels, but we're going into an increased period of volatility. So these 3 ATR and even 4 ATR plays might be okay, right? Not something that I feel comfortable with, but for some of our more adventurers there, then you could do that. You have Nakor, one of my favorites, but even though it's one of my favorites, it's been a very prolonged downtrend. One of the things that we were able to take to the downside, got massive look on, and bypass this opportunity due to personal reasons, but we saw it was there. It's really juicy off the rip, and looking to fall through to the downside. Stop out would have been at the high, sell here, nice rip. Even in the pullback, very nice blowout candles there for the fall through. That would have been a 1, 2, 3, almost a 3-week play for both of them. So the base hit was like about a 1-week play, not too bad, and then the next one would have been multiple weeks of price action to the downside, 3+ weeks. So shout out there. You got PH. So PH, we're going to walk our setup down here. Parker. As you can see, all I have to literally do is, once you get another setup, if there's multiple setups in the run, it doesn't even cross, right? We have our trigger there. There's buying pressure. but it doesn't really cross the sellers. They're in control. So we're going to let them stay in control, and then we're going to pounce when they get caught slipping. So this is kind of what we want to see. Two, as it regards, if you look to the left a little bit, there is that gap. We want to track the gap, and we got around the 50% mark on the gap. Typically, pullbacks in the gap, they're either going to go about 50% or all the way. Well, my limited experience in the market there. So 50% or all the way. If it goes all the way, it'll close down to what is this? 654, right? If that happens, we're still waiting for the same setup. Not necessarily something that we have to take there, but that's kind of where that gap is on the weekly. But the pivot is a little bit lower than that. Really, where you see the pivot high coming out of the pivot low. Really, the thrust, the push upwards on the market came out of this pivot low here. So this pivot low started the thrust upwards into pivot high, but the gap starts at 554. So I'll be looking for it to close that gap there. Something to watch out for. Kind of touched on Palantir this morning, but I would just be cognizant that the market has been hot for weeks, multiple weeks in this stock. So there might be a break in place. If you look from the last couple rallies, 1, 2, 3, slight rest. We'll count it 3, 1, 2, 3, 4, 5, 6, 6 before we get to 6 weeks on the push, and then some sideways action, 1, 2, 3, 4, and then another 1, 2, 3, 4, 5, 6 weeks on the push. Really big push. So expect to see maybe a week or two of rotational action in Palantir. That is great for you guys, because if you get some rotational action, that means that it gives people time to rest, get some more funds together, and really evaluate how they want to play this stock. Maybe a couple buys at 66.83. If you're looking at options, wait for the setups. Starbucks. So yeah, that happened, right? Starbucks getting a massive punch to the downside there. How I would play this, right, is I play if on very large candles like this. If I want to take the play, I don't necessarily, to increase my risk to reward, I'm looking at it from the 50% perspective. If we could get a cross above 50%, it has a higher probability when you look at rallies with pullbacks in follow on. So if this is going to have some follow on, maybe a pullback into the upper third with follow through, right? We don't want the follow through. Obviously, it's in an uptrend hitting a rotational level. So if we can get above around the 50% mark, the ability for follow through is minimal. If anything, it comes down, retests the level, and pushes, which is acceptable for us. So we want to be cognizant of that. SCHD. SCHD for us is major and in play. So right around the rotational level, but breaking it. If we can get back above this level here at 2817 within the week, that'd be really, really sweet. As it stands currently, I don't think it is doing that. I think it's continuing to sell off. So might not get that as of right now. But we'll be watching for it. It's kind of what we want to see on SCHD, one of our dividend plays. Really good bid. We took some off the table up here on kind of this indication that, hey, there might be some selling pressure stepping in off of highs. So we've been in this for a minute. We just figured we'd take some off the table. And shout out to us for doing that. STZ. A little bit of the same here. Don't want to beat a dead horse, but you've got, you're in negative territory. As it rallies into this kind of danger zone here, kind of going rotational. You can see the rotational levels on the weekly. So going slightly rotational, but the reality is I'm not really looking at Constellation necessarily for something big unless it rips something big. So you see new negative downtrend, new downtrend with some setups to the downside. But you would have to respect all of your buyers or all of your sellers starting up here. So risk to reward on this bad boy is considerable when you think about taking plays on this. So just something to watch. Oh, AT&T. Yeah, man. Loving it. So again, wide candle. We'll take it at the halfway mark. If it goes halfway, cool, it'll be a good look. If it doesn't, we'll bypass it, keep it going. But I'm expecting to see a lot of stocks kind of peel off highs, kind of make maybe even bull flags or rotational setups. Here we go. Here's another one. Now this is also kind of what I like to see too. When you see multiple red candles stacked, but they're not really following through, this could be a very nice rip. We are already in T-Mobile to the upside. We've been taking some heat on it, but seeing this and not seeing it break would be pretty snazzy. So ideally, we'll put in a new alert there. Remember, our stop is still the same. If it crosses below our setup there, we'll go ahead and let it go. Don't mind being wrong. That's good. And we'll move on to the next play. But a position potentially to add to lower our dollar average buy is here, right? Here's another setup. So essentially we see a lot of this selling pressure stepping in, but no follow through. If this rips, I could see it getting to highs. This would give me my buy would be probably another vertical added on and a butterfly potentially seeing the stack happen with T-Mobile. So my buy-in would be if it crosses above 233.52. If it crosses above that, I'd be looking to add another vertical and a butterfly to the high. Big old Tesla. So we got Tesla, nasty blowout candle here. Been in a rally for a hot minute. We actually, you're gonna hear me say this a lot. Yeah, I was telling people, hey, this Tesla rally could be massive, and I bypassed that because of earnings. Probably will never do that again with Tesla. But something told me, I was like, yo, there's going to be a massive play in Tesla. I just feel it. I feel it in my gut, man. And actually, we were looking at it back here. So if you go before the green line, we actually got a position 3 weeks early. It was in a squeeze. And I was like, man, I know something about this. I don't think it's going to the downside anymore. I think it's going to be a stupid rally. This is way before everything else. We were buying Tesla back here, and then I was like, man, I feel like it's just going to be a stupid rally. It's going to be goofy. And it peters out for 3 weeks. It just peters out. Now, had we waited, this is around the time we developed the setup. Had we developed the setup about 3 weeks earlier, would have seen some massive results on Tesla the following week. I would have been a believer then, right? But we caught some other really good plays in Palantir and AVGO. So I can't, can't catch them all, right? Can't catch them all. Or maybe you can, let me not think negatively. But TTWO is next, right? Let's get in range here. How about we scroll out to the right? Yes, sir. And then do this and go all the way to the right. Okay. So as you probably already know what I'm going to say. Beating up a dead horse here. Super extended, waiting for a pullback. We'll go ahead and mark up some stuff for you guys if you are a looker of TTWO. All-time highs are here, obviously. And then trend change. We want to put the trend change here. Boom. So there's your trend. You can see where you probably could have took that position for the buy right around this area, right at the earnings play. Right at earnings, and then it fires off, runs. You can almost roll it there. Nice blowout candle here as well for this position. But essentially, I'd be looking for a pullback. If you're catching the vibes, a lot of times your best positions are going to be new trend changes with nice juicy momentum setups. Uber getting slaughtered. Uber is actually taking a beating, but if you notice, there's been some rotational action here. So if you want to buy biased on Uber, this 54.93 level is where I can get buy biased. 57.56 is kind of when I want to know what's going on to get a little bit more of a buy bias. You can almost actually put something right here with all this negative selling pressure. But going into the summer, Uber's just, or going into the new year, sorry. Uber's getting absolutely hammered. So good company, not going away anytime soon. Just I agree, overvalued, and the market agrees here. Been in a very nice rally uptrend here. had some choppiness, but then set a very nice squeeze with a push there. Nice juicy pullback, fire there, right? Absolutely nice. So, but this is clearly a sign of distribution, kind of at the highs. So something to watch if you want some buy bias, but your setup is still going to be the same. Even if I get a buy bias, there's going to be a point where if I'm wrong, I let it go. Another stock that's been getting hammered will continue to walk this bad boy down. But if you see the setups, even if you want to take this on a day trade, there's been a couple of really clean day trading opportunities on UNA. Nice rib here, sold. You could take the sell below the low, get out on the day. Same thing here, low rip there, sell below the low, get out on the day. It would have been profitable, and we can look about what that looks like last 2 days. This is a rip. If it crosses below the low, you take that sell at the end of the day, and then it even is extending even today to the downside. So UNH looking to get slaughtered. The volatility in this bad boy is super extended to the downside. So massive volatility after the passing of the CEO there. In the stock is taking a beating. I would say though, you can almost get to a point where it's the support level with a buy bias might give you a buy here. But again, with these volatile stocks, just got to be careful that you're on the button. You have your risk management in place. You don't back the brain stroke. You don't just back your account up to this bad boy and let it all run on black here, right? You need to. You're already using leverage instruments and it's already volatile, so there's not really much that needs to be done. Just put the play on. Nice risk management. Keep it pushing. The dollar looking strong. So what I want to kind of hone in on in Forex is in regards to how we set this up. What this means in this market, the dollar being strong, even though equities are at all-time highs, is very interesting, which really kind of telegraphs to me more that it's not necessarily the dollar strength, but more on the global weakness compared to the dollar. So just kind of keep that in mind. You have dollar strength, and typically when you have dollar strength, people want to keep cash as the dollar grows and kind of sell off equities, kind of holding cash right now. There is some things that they're going to be buying. So you're seeing a lot of pivoting out of things because the dollar's strong. If it's not running, 3-4 times, 3 ATR, stuff like that, people are kind of exiting quietly because of this right here. In the global market, you might see them run to safety with the US being safety, AE getting bonds, AE getting the dollar. Something to watch out there. So yeah, the dollar could have some more room to the upside, believe it or not. I want a little bit of a pullback, but yeah, there it is. It's a story in and of itself. New downtrend, Verizon. So we like new downtrends because when we get rallies into those downtrends in confirmations, that's money, and it's typically not slow. It's fast. It moves pretty quick. So, but just keep in mind though that Verizon, if you look to the left here, looking at some rotation, keep that in mind. Yeah, so I wouldn't be looking for too much. Wait for it to come up and pick you up. In this instance, it's going to come up and pick you up. So we'll mark this in yellow. We don't know if it's going to be solid as a new price level moving forward. But right here, rotation. So you're into this rotational zone, selling off from that. Boom. Okay. And so if we could get a setup pulling back up into this level with a setup candle, looking to take that short. Nothing right now. I think Wells Fargo. This is Wells Fargo here. Oh, Wisconsin Energy. Sorry. Nice juicy setup there. Look at that. So kind of know what we're gonna do. Trigger above 95.78. If it happens, we'll take that play to the upside with a stop out of a low. If you wanted to be a 2-bar professional here, look to the left. This is 1 bar, maybe 2 bars. Is if you don't like the tight stop, but a break of 94.11 is the maximum you need right there. But that would be your stop. 2-bar professional to the left there is what you would do. Go ahead and mark those levels too, pivot levels, so you can see them in this range. Boom, there's one pivot. We'll take first pivot, and then we'll take all-time highs. Boom, and then all-time highs. Boom. So you're seeing it, how we kind of do it. I like to show that we're doing this like this, so you can kind of see like how you even mark up your charts, even if it's a new stock or whatever. You don't have to go all the way back to the left. You can come out here and just mark it up, moving forward. But it's still, going left to right, uh, essentially higher time frame to lower time frame. So higher time frame first, lower time frame going left to right. Here's Wells Fargo. Yeah. So this is actually pretty stark. And why do I say that? Because after this gap, it's respecting the gap. Um, how I would play this, I won't be taking this, but how I would play this is, you could adjust and say, okay, well, we're seeing some buyers respect this level gap, but there's a gap here, right? So just keep that in mind. Things like to fill gaps at least halfway or full ways. So if you want to take this play to the upside, maybe you could take this to highs with the butterfly. That's my recommendation if you do Wells Fargo to the upside off the pullback. But I would ideally want to see a red candle setup as opposed to a green candle setup. But can't always get what you want. But we can see, with this being a target rich environment, there's plenty of setup. So you don't have to really force anything. You can set your play and get in what you want to get in. So XLE, nice juicy 3-week pullback. It had a nice 6-7 week run, and there's a 3-week pullback. Totally normal, totally okay in an uptrend, right? 1, 2, 3 weeks of up, 1 week of down, 1, 2, 3, 4, 5 weeks of up, 1, 2, 3 weeks of sideways, and a week of down. So essentially 4 weeks of not really momentum after some 5 weeks of pushing up. Now you get 6 weeks, 7 weeks of pushing, and then now you get 3 heavy weeks of pulling back, totally within the realm of the stock. That's why when you look at stuff like Palantir, Tesla, the Qs, totally okay for them to go sideways or even give you an opportunity to get in later. And so we got XLV here. We made some profits already on XLV a couple weeks ago. Setup worked beautifully. I had an opportunity for a roll in another roll with closing the position before this massive rally against us. Then you have, let's say you got in on the retest of the 21 or the 8-period moving average. Wasn't looking to do that. 8-period moving average on the weekly, right? And then a blowout there with unbalanced volume actually trending to the downside. So watch out for the XLV and the shakers in the XLV. We'll run through these guys pretty quick because the market's about to open, and we want you guys to kind of get in trading. So we already talked about AVGO, Axion, a new one that's kind of put in there because a lot of the hype that's around Axion, waiting for some pullback there, but already kind of happened. So that's a very bullish candle, right? Keep that in mind. Cross above there. But where'd your stop be? Respecting all your buyers, stop out at the low, right? Very cool. Corn, brand new uptrend, giving us a slight push, and so we want to see corn continue new uptrend. Unbalanced volume, still, it's shaky, but if it develops, we like to be in brand new uptrends and brand new downtrends. GNL, decent little couple base hit right there, not too bad. MU. We get rid of that. We don't want to be a seller. We want to be a buyer. So MU, as it stands right now, kind of got into that yesterday. What we saw was pretty much the setup, brand spanking new uptrend there on this long time tech, this tech company here. Unbalanced volume a little shaky, but a couple red stacked here, crossing above there, looking to take it to rotational highs at minimum. Let's see how it's pushing. So it is pushing. So from when we got in, we'll kind of zoom in there. Got in as it broke above pre-market and then pushed down. So got a really nice fill there, and then immediately kind of took off to the races. Liking this 10-minute setup here with a nice, basically essentially rotational bull flag. It's going to test that 111.13 level again. Hopefully we get some ascending triangle action and then a breakout. It's kind of what we're looking for. You got we'll go back to the weekly. Got about a minute on the market there. O, taking definitely some heat. Remember, we're long-term buyers, so looking to average in. Got a buy bias on O. If we start seeing some crosses above these reds, we'll be looking to add. This is kind of what I'm talking about with if you've got a buy bias on something, you want to put something in your portfolio. This is how you do it. You just kind of wait till it sells off a lot, and then you start seeing crosses above your setup candles. We've kind of talked about Palantir quite a bit. This is one that we're going to be talking about more right now. It's in the stratosphere. So looking for, let's say, a pullback for it to come down and pick us up. We don't want to kind of buy at super extended ranges there, right? But it's a cheapo, right? 12 bucks. I mean, if you look back to the left, the highest it's been is 25. And so it's a cheapo, something to look out for. SEHT, we talked about that. Sound, same thing. Yeah, it's a cheapo, so any slight pullback in the stock, go ahead and pick this one up. Just have it in your portfolio for the price of a really expensive cup of coffee, right? 20 bucks. So keep it in your portfolio. But I've heard the potential on this could be massive. It's in the tech AI field, so just a hype train alone. But keeping to our rules, at least give me a setup that we can pinch off of, right? We've talked about Tesla and we've talked about XLV. So there you guys go. Thank you guys so very much for joining us. The market's about to kick off here. Happy hunting. We'll talk to you guys soon. Have a good day and goodbye.